Hi, I'm Bradley Birchall. In this video, I'm going to cover what is capital raising and the different types of startup capital. So, first up, what is capital raising? Capital raising is your need to raise capital to grow your business. Basically, what this means is that you are going to reach a point where you can continue on your way using limited funds to grow your business, which in terms that are recognised in the investment community usually means that you're going to be capital constrained in growing your business. In other words, you will only have so much revenue that you can spend on things like sales, marketing, and product development. So we consider this to be capital constrained, which leads to organic growth. Now, organic growth means, you might be moving along, picking up 2 or 3 new customers a month, and you just might be doing that consistently every month. But if you had capital in your company to grow more quickly, you might be increasing your sales and the number of users of your solution by anything up to 30% a month. Wouldn't that be a hell of a lot better than actually getting growth of 2 or 3 customers a month? So that's why you need to raise capital so that you can have a faster path to growth. Now, the other reason why you might need to raise capital is you might be in an industry or a sector where you have competition that is rapidly coming up from behind you. You don't want to be overtaken by your competition, which means you need to grow quicker than your competition. And to do that, you need capital. So organic growth is probably going to see you wiped out by your competition. You actually need capital to grow quickly. So that is probably the second most common reason why you need to do a capital raise. So moving on to the third item, which is basically what are the different types of capital? So the different types of capital. So let's look at the first type, which is bootstrapping, which is you, me, or you, funding your own startup, which means you've probably put in 10,000, 20,000 of your own money. It might be 50 or 100,000 of your own money, but that's what bootstrapping is. The longer you can bootstrap your company, the better off you're going to be, because you're going to be in a stronger position to raise capital. So the next is the 3 F's. Family, friends, and fools, as we call it in the industry. So that's usually where, after you've bootstrapped it yourself, you're probably going to go to these people and you might ask them for a bit of money to put into your business. The third is angel investors. So you might need to raise 50,000, might only be 20,000, it might be up to 200,000. But that sort of range from about 20,000 to 150,000 is the angel investor range. And that is the third most common and the third in sequence usually that you're going to go for to raise capital. So the fourth is private equity. Now, private equity can come from primarily 2 different sources. One is high net worth individuals. These are wealthy individuals that have over $2 million in assets. And the second out of the private equity basket are basically family offices. So family offices are families usually that have made hundreds of millions of dollars in their own sector or in their own industry, and they run a professional company under their family office that basically invests all of the wealth that they've made in new ventures, often startups. So the fifth source of capital raising for startups is venture capital. Now, I'm not going to talk too much about venture capital, but to suffice to say, it's not an approach that I like, nor many people do like, because with venture capital, it's more than likely that you are not going to meet your targets at some point, and that VC firm is going to take a considerable amount of equity away from your company for you not meeting those targets, which is one of the reasons why we also call it vulture capital. So I wouldn't recommend venture capital, and I would definitely stick to private equity through either family offices or high net worths. In the description below, you'll find a summary of this video and all the links. And don't forget to subscribe, because I've got a ton of awesome video coming up for founders, startups, and entrepreneurs like you, and you really don't want to miss it. It's going to put you on the smarter path to success. Thank you, and I'll see you next time.